Google McDougal. So Google McDougal, this is one I started buying here recently in different portfolios, including in the public account. Public account, April 23rd, 2025, I bought 444 shares. I moved fast on those, and I'm glad I did because I'm already up $25,000 on those Google shares I added there on April 23rd. You see an opportunity, you got to pounce. Now, I think it's very important I remind everybody what type of company Google is. This is a tech conglomerate. They own Google Search, which is used just as much as ever before, right? I use Google Search many times a day, every day. Many times a day, every day. They own YouTube. You're watching this likely on YouTube right now. Although I do release my videos on X as well. You could be watching on X, but more than likely you're watching on YouTube. Android. They own Waymo. They own a huge consumer cloud business and a huge corporate cloud business as well, which has been expanding very nicely over the last few years. Additionally, Gemini, right, in their AI products, they also have a big hardware business, and they own a bunch of other businesses as well, okay? That's just like the bulk of some of the most important ones there. Now, when it comes to Google McDougal, I posted this inside my private stock group here, it was a grade A income statement. Their revenue went to $96 billion plus from $84 billion. If you look at income from operations, it went to $31.2 million from $27.4 million the same quarter last year. Net income went to $28.1 billion from $23.6 billion. Diluted EPS went to $2.31 versus $1.89. Does not look like a company that is having their lunch eaten by ChatGPT or anybody like that. Looks like great numbers, and that's all Google has to do. Keep putting up the great numbers quarter in, quarter out, and all this fear about, ChatGPT is going to eat them, blah, blah, blah. It's all going to go away, right? Because at the end of the day, we see Google doing what? Increasing their revenues massively. I mean, they made almost $12 billion more in a 3-month span than the same quarter last year. The death of Google has been greatly exaggerated. Now, total cash equivalents, marketable securities on Google, $95 billion plus. Non-marketable securities, 52 plus billion versus 37 billion in the same quarter, or actually not even the same quarter last year. This was back in December 31, 2024. Look at how much the non-marketable securities has increased. If you look at shareholder equity, 362 billion versus at the end of last year, 325 billion. They're increasing that rapidly. And by the way, non-marketable securities, I basically look at it as long-term investments is what I call it, okay? But usually it's kind of like assets that are on the balance sheet that you can't, they're convertible to get out of, but it's not like you can get out of it tomorrow necessarily, right? Like a savings account or something like that. So non-marketable securities are investments such as U.S. savings bonds, private equity investments, certain government securities that are not traded on exchanges, have limited liquidity, meaning they cannot be easily bought or sold in the secondary market. So that's what differs versus, let's say, like a marketable security. Non-marketable securities are usually, the way I was taught in accounting way back in college is this kind of things that, might be more than like year plus investments, and these are like less than a year. That's the way my accounting instructor kind of put it the simplest way possible. Now, what about projections for Google? Because I have projections for Google, okay? Listen. We got a new beautiful feature on 1000xstocks.com where essentially you can now save your projections. So before you used to just be able to do a projection and that was it. Once you cleared the page, that was it. Now we allow you to save your projections, which is going to be a lifesaver for me because I end up creating so many projections for so many companies. So we launched this feature like a week or two ago. I've already saved up a few. Got a lot more to save over the next few months here. But I went to Google, brought that up, and here are my Google base case, bear case, and bull case for the stock and where I see the stock price going over the next few years. My base case for Google, and keep in mind, my base case is usually very conservative. I've been doing 10% revenue growth per year over the next few years from 2026 to 2029. And then doing 12% net income growth, not a crazy number at all, per year over the next 4 years, right? P/E ratio of 23 to 28, very fair number for a company like Google. That gives me a compound annual growth rate of about 15% on the low end and 20% on the high end. Easy peasy, lemon squeezy, give me the money, pleasey. Bear case, my bear case for Google has them doing only 7% revenue growth per year for the next 4 years, okay? 8% net income growth per year for the next 4 years on average. That would still give me, even at a 20p on the low end, 25 on the high end, it would still give me a compound annual growth rate of 7% to 13%. I mean, if you're going to give me that on a bear case, I gotta take that opportunity. Like, it's just too easy of money. Like, even in a bear case scenario, I'll probably outperform the S&P 500 because I'm not even convinced. We can call that a midpoint of 10% CAGR. I'm not even convinced the S&P 500 will give a 10% CAGR from 2026 to 2029. I'm not convinced at all. And so the fact that I could get that from Google in a bear case, I mean, I got to buy the stock. I don't know what else to say, right? That's why you see me buying the stock almost every week right now. As far as a bull case for Google McDougal, I have them doing 12% revenue growth per year on average, 2026 to 2029. Net income growth of 15% on average. 25 to 30 P ratio for a company growing, low to mid double digits on top line, bottom line. It gives me a CAGR of 20% low end, 26% high end. I got to buy it. You know what I mean? Like Google, it's just money, man. It's just money. Do you want to make easy money? Do you not want to make easy money? You tell me. What do you like to make? I don't know. I like to make easy money, man.
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Google McDougal. What the heck is going on here? Stock popping 7% plus after hours. And what am I going to do with the stock now at this point in time? Well, here's what happened. Google shares, Alphabet shares popped 7% plus in extended trading as investors celebrated what they viewed as minimal consequences from a historic defeat last year in a landmark antitrust case. Last year, Google was found to hold an illegal monopoly in its core market of internet search. U.S. District Judge Amit ruled against the most severe consequences that were proposed by the Department of Justice, the DOJ, including the forced sale of Google's Chrome browser, which provides data that helps advertising businesses deliver targeted ads. Google will not be required to divest Chrome, nor will the court include a contingent divestiture of Android operating system in its final judgment. Plaintiffs overreached in seeking forced divestiture, I can never pronounce that word right, I apologize, okay, of these key assets. The moral of the story is here, Google's not going to have to get rid of Chrome. They're not going to have to get rid of Android. Is this a surprise to me? No, it's not a surprise to me at all. Like, this was to be expected. I'm surprised anybody's, surprised about this. But the stock popping huge. Like, I can't believe people thought like they were going to be forced to sell Chrome. They're going to be forced to sell Android and get rid of all this stuff. I'm like, no, come on, man. Like, I don't think enough people understand the legal system, how these things work. I don't think they understand what a true monopoly is. People think if you have a lot of market share, that means you have a monopoly. No. I remember even in college, in some very early business courses, learning what a monopoly was. Maybe that was business and law. I learned that. Yeah, I think I took a course in business and law, either freshman year or sophomore year of college, right? Before I dropped out junior year. And even then, I learned like what a monopoly was. Because, just hearing about the term, a company is a monopoly, I thought that meant like, you have like huge market share, so therefore you're a monopoly. No, that's not how it works at all. Look at the definition of what an actual monopoly is, and then you realize, wait a minute, just because you have a lot of market share does not mean that. You have to do all these different practices and, illegal things to essentially put you in that sort of position. So at the end of the day, like, Google has massive market share. We know that, but it's not a monopoly. And so, somebody that took freshman year, sophomore year college course realized, it's not actually a monopoly. And it's crazy. It's crazy. You would think the stock market, you would think investors would be intelligent enough to know like very simple business law. Like this is, once again, this is something I learned in community college, either freshman year or sophomore year, and the stock market doesn't realize it. Like the stock market, like it's just crazy. Like you think investors would be like they're so intelligent. No, like it's unbelievable to me. It's unbelievable, man. So the question is, what do I do now with my Google McDougal shares, 444 shares? Public count up $24,000 on those. I'll let those ride. I do not have ambition to buy more Google shares in the public account. I feel good with where I'm at. Remember, the public account, what is the biggest position in the public account? It's Meta. Not only is the biggest position in the public account, it's by a mile the biggest position, right? There's $1 million plus position for me in the public account. So Google's a lot like Meta, right? Obviously, they have different services and platforms that they're dominant on, but at the end of the day, like huge advertising business at Google, huge advertising business at Meta. Meta and Google, they dominate advertising in the world, right? And so owning Google is kind of like owning a Meta. It's just, the only reason I bought Google, in that dip was just people were being absolutely so irrational with the stock. And I'm like, this stock deserves to be at least 50% higher than where it's trading at right now. And I'm like, you're going to give me arguably one of the safest business models with one of the best income statements, balance sheets, cash flows in the world? That should be trading at least 50% higher now. Not like, oh, it's going to go up 50% over the next 3 years. No, it should be trading 50% higher from the day I bought it. Right? And we're going to see that play out here very soon because we'll be up 50% on it. I'm like, you give me that opportunity, I'm going to take it. So I'm not going to buy more shares in the public account because it's already so overexposed to advertising, right? No, in the Patreon portfolio, here's the deal. I could easily continue to buy Google stock. Like, I probably continue to buy Google stock because you got to understand, I do own Meta in the Patreon portfolio, but it's a really small position. And the reason being is, with the Patreon portfolio, the first year I was only allowed to deposit $150 a week. And then we changed it to now I'm allowed to deposit $250 a week. How much is Meta stock? Meta stock's like 700 something, so I can't even buy more Meta shares over the years, even though it's always been a great deal. So Meta's a really small position in there that I got when I first started the Patreon portfolio, and now I can't afford to buy more shares. So Google, I would love to continue to build this one, and then I can probably hold Meta and Google in there as kind of a tandem play, and then if you add those up together, they'll be like a big position. But if you add them up separately, they're not a big position. But when it comes to Google here, like, it's at 24p. Okay, it's up 7-8% tomorrow, whatever. Big deal. What's it going to put it at? A 21 forward P? Like, it's still a deal. So the bottom line is I got to keep buying Google McDougal in the Patreon portfolio. And when do I stop buying Google? I would say 275 and over. I would stop buying Google essentially. That would put the stock at like a 25 plus forward P, somewhere around there roughly, right? Which at that point in time, I'd be good on Google. And that does not mean Google's a sell at 275 or 280. That just means I stop buying. I'm like, I'm good. I'm good with what I have now at this point in time. So yeah, there's still quite a ways to keep buying the stock. It's not like, it goes up 7% tomorrow. That's it. The move in Google's done. Like, no, we got further to go here, right? I think this also importantly, I think this sets a tone that maybe the government isn't going to be anti-big business, because there was a worry, especially with Linda Khan at the helm for the last few years. There was just a lot of fear around, the government's going to go after big business. And I think since what happened here, because Google was the one that, if you look at the Trump administration, the big tech I think they viewed least favorable was Google, right? And so the fact that a ruling like this comes out, I think it gives more confidence that the Trump administration and this next, 3+ years is not going to be, them going after big companies and trying to, take them apart and all those sorts of things. Because that was a little bit of a fear over the last few years. And I think that this situation, so if anything, I think this might give some more comfort to even like Amazon. I think this might give some more comfort to Meta. And I wouldn't actually be surprised if a lot of the big tech stocks rally on the back of this. Like this news, yeah, it's great for Google, but I think it's also good news for Meta. If there's any fear about, could Facebook be separated from Instagram and WhatsApp? I think at this point in time, you got to throw that out. Could Amazon have to divest of AWS from the e-commerce business? That'd be so silly. I think no. Okay, and I think a situation like this gives more confidence. So if anything, I think big tech can rally on this. But the stock that's in big tech that I think this is the best news for, guys, I think there's a stock that this is even better news for than Google. I mean, it's great news for Google, right? But there's a stock that's arguably benefits even more from this. And it's not Meta, it's not Amazon, although those ones will benefit from this as well. You know who it is? Apple. Why Apple? No one thought about, splitting up Apple. The reason being is Apple's deal with Google, from my understanding, Google pays Apple tens of billions of dollars a year. That money should go to Apple's, pretty much straight to its bottom line. If things got switched here, that could affect Apple's profitability, we can call it in the tens of billions of dollars, which would have been a big deal. You would have had a big value derating in Apple stock, and we could have been talking about Apple stock goes well under 200 if that was a situation back into with something with a 1 in front of it. Now that you got that out of there, profit's going to keep pouring in there. So the moral of the story is, I think this is bigger than just great news for Google. I think this is great news for big tech. And what does that mean? It means great news for the stock market. Because who runs the stock market? Big tech. They're the biggest weights in the S&P 500. They're by far the biggest weights in the QQQ, right? So, I mean, positive. This is a big positive, man. It goes way, way bigger than just, Google, okay?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
So I posted this on my X page. Once again, that's always linked in the description if you guys ever want to follow me on X. But, Google, obviously big move here today, up significantly and that stock has gone up quite a bit very rapidly for me because that was a buy back April 23rd. So that was 5 months ago or so, or somewhere around there roughly, right? And, to already be sitting on a 47% gain is pretty significant on a stock like Google. But my feeling on Google is I think it's a hold right now. And I think it's also a buy. Like I won't buy any more in the public account, but I wouldn't mind buying some more in my Patreon portfolio to build that position bigger. And the reason being is you look even after today, Forward P, let's call it Do 22. If you compare it versus its peers, which you're going to compare somebody like Google against Apple and against Meta, why doesn't it deserve a 22? Why doesn't it deserve actually a much higher number than that? If you look at Apple trades 31. Meta trades around 26. Now you say Meta's got likely better revenue growth going forward, and it's had better revenue growth in the past. So Meta likely deserves a premium over Google. Apple trades at 31. And Apple actually has significantly lower revenue growth than Google McDougal. And I think also, I just think Google's more well-positioned for the next 10, 20 years than Apple is. So if anything, I think Google should get a rating higher than Apple. Or you could make a case that maybe Apple should come down a bit and Google should go up some. So I view the stock as either a buy or a hold right now. I actually don't think it's a sell. I don't think it's, to sell Google now, it just doesn't make a lot of sense to me, at least in my personal opinion. But let's hear from the Wall Streeters and what they have to say.
39.5% since the so-called Eddie Q sell-off. That was May 7th. You said, everybody pipe down, relax. The stock is just fine. The company's just fine. Now what you say, my friend?
Now I say it's still undervalued, and a meaningful overhang has been taken out of the name. You never know what's going to happen with these things. The judge can go any way they want to. But the idea that we would be talking in May, as you referred to, Scott, about competition eating Google's lunch, and at the same time that this judge would rule that there's a monopolistic practice here at Google, well, that was the ruling, but that the punishment would be draconian to reflect that monopoly, that was completely incongruous. You can't hold those two thoughts together. So although it was not a fait accompli, I'm very delighted. This is the news I expected. And now the overhang's gone. And what you've got is a stock that's trading at the low 20s. I think it's about 22 times forward earnings. You compare that to the rest of the Mag 7. And like the rest of the Mag 7, this is going to be an AI beneficiary. Yes, there is competition. But this is Google, a multi-trillion-dollar company that has been at AI for a long, long time. People don't remember that, but it's been at this for decades, and they have a viable product. That's showing up, by the way, in their quarterly results, which I expect will again be the case in the quarter to come.
You catch a fair amount of grief from the bench, and now you get some love. Because, I mean, you told people to just chill, relax, don't make such a huge deal of the Eddie Q thing, even though it's not like it's an insignificant point that he was making. It's just the stock's up a lot, and this is a big deal. 9 target hikes at least that we could find today. What do you think about this? I'd like Jimmy declared this, even with the gain, still undervalued. Well, if you look at mega cap valuations, it certainly has a lower forward PE than the others. Did we make that up? Let's show it if we have that. Because Amazon's like at 32 plus times, as is Microsoft. Alphabet's at 21.3 times. Maybe it's a little more now because of the gain that you're getting in the stock today, but nonetheless, does this start to close? Does this closure, if you consider it that, close the gap from a valuation standpoint between Alphabet and some of these other names?
Jimmy nailed it. Yeah, this is removing a significant obstacle, and I agree with you. I believe there's further upside potential here. When you look at the sum of the parts, you look at the various businesses and the valuation here, one can think about this company trading with a market cap exceeding $3 trillion very easily. Just thinking about the combination of a very powerful Waymo business, YouTube TV, the cloud business we know is doing well. And when you think about the valuation of OpenAI, how that has grown so dramatically to over $500 billion, what does that mean now for the valuation of Gemini and for Google Cloud itself? So it lifts the obstacle. It absolutely is a clearing event. And
the most compelling thing about Google, right? You just spoke about OpenAI raised, I think it was today, at like a $500 billion market cap. The most interesting thing is Google has only seen the bad side of AI so far in regards to the stock price. Everybody's always like, oh, so scared, like it's going to be disrupted, blah, 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 blah. So all they've had is negative effects so far to the valuation in regards to AI. Meanwhile, they're likely going to end up being a big beneficiary of AI. So what happens when we flip from this negative stance into more of a neutral stance and then into a bullish stance around Google? And what's going to happen to its valuation then? Think about that for a moment. I think that's very, very meaningful.
I also think it benefits the entirety of the AI halo because it gives now Google the opportunity to go out and actually spend more. Google doesn't have to sit back and concern itself with these antitrust fights.
I'll tell you what, this is an antitrust issue, quite obviously. It doesn't eliminate the broader question, like the one that Eddie Q raised in the courtroom, of whether these large language models and these co-pilots and generative AI deals are going to cut into the monopoly that they all but had in search. This does nothing to address that, does it?
That's fair, but it does allow them the opportunity for a very cash-rich company to go out and actually spend and defend against that loss of market share that potentially is coming. So
you're pointing out something very important. This is a huge company. The huge companies in any industries win by virtue of their size, by virtue of the resources, whether it's financial, as you're pointing out, or as intellectual, as I was pointing out before. I think this is very important. This is why I was so calm on the Eddie Q comments. It's a $2 trillion company. Now, I was surprised that it became a battleground stock. This was one of the more calm moments that I've had when defending a stock because of the size, which you're speaking to, Joe.
Twice you own it too, obviously. Do you think it's a value? You start to close the valuation gap now?
I think you can close it somewhat more, but I don't think you'll close it completely. This stock is always sold at a discount, or generally. I don't want to say always, because that's just too strong a term. But it's generally sold at a discount over the last 5-10 years to some of the others, including Amazon. But here's what it also does, which I'm not aware that most are talking about. Gmail, Google Mail, is the dominant player in mail in the U.S., in email. Without the microscope on their for anti-competitive activity, they can do what Netflix has been doing. Now, they've raised prices somewhat, but they can raise prices more now without the glare of antitrust proceedings on them. So I think there are multiple levers they can pull to drive revenue, to drive earnings, and I'd look forward to them doing that. I've thought about this quite a bit, is that how much of that headwind from the antitrust proceeding was still in play? I mean, the stocks recovered from 165 to 200 before this. So you got to believe some of it was discounted. Now, when it was at 165, everybody
crushed. Look at the move in the stock today. It would say that
I'd say some of it has been discounted.
The market maybe didn't expect this outcome.
No, clearly it didn't. But you still have the headwind of search share and of giving up some of their data.
I know, but the whole point is that maybe all of that was overblown.
No, and I think it was by today, but what I'm saying is that's the reason why it won't recover, or it won't go to the extent on a multiple basis that you see Meta and Amazon and others at. So that's my point. You'll continue to see it move up. And I think the headwind of losing position in search is overstated, because they'll still be the one to dominate advertising just because of their share they'll have. So I like it. I'm staying there. I debate about buying some more when the announcement hit, but I choose to wait for it to pull back a little bit because I think that's what will happen.
Liz, I'll make this quick. Meta is, you mentioned it, it's the direct comparable here in terms of what the stock does next. 2 years ago, Meta was trading at a high teens forward multiple. Many people, and I think it was you, Steve, it wasn't me, bought the stock at that point in time and have enjoyed both a multiple expansion and earnings growth. And that's exactly what I think you're going to see with Google over the next year to 2 years.
Aren't you talking about, you're talking about a stock move, but you're talking about apples and oranges in terms of issues.
You're correct. I'm talking about a stock move in terms of what to expect. You're absolutely. There are some similarities. I mean, Steve was just bringing up email. Well, let me extend this, because Steve was just bringing up email. It's only one piston in the engine. There is YouTube, which I would say is a direct comparable to what's going on at Facebook. But yes, Scott, there was the year of building out the metaverse, followed by the year of efficiency. I'll grant you. I'm simply saying, from a stock point of view, absolutely Meta is the comparable in my mind.
So, Liz, you look at this trade lately, which has been somewhat in question as you head into a new month. This is just what the doctor ordered. If you can remove some sort of regulatory and antitrust overhang over the space, what's that do?
I mean, it certainly helps. It removes one of the skepticisms that people might have had about current valuation levels. I think we're talking about some idiosyncratic issues with one stock, though. But when you look at the trade itself, if we're just talking about mega cap tech, or even if we're just talking about semiconductors and everything that has been under pressure over the last, call it 5 trading days or so, you can't remove the fact that what's happening in the rest of the market, especially with yields, is probably pressuring them as well. And I talk about the relationship between between assets a lot. This is a relationship that I think right now is intact. You've got long-term yields rising and long-duration stocks under pressure. That makes sense. This could be a period of time where we're just sort of normalizing to a level of yields that needs to be more rational given the environment, a level of inflation that's perhaps digested by the economy.
Listen, these big techs are benefiting massively by what? By what's going on in the yield market right now, right? We know these big tech companies are loaded to the sky with cash, which if you're able to buy treasuries with all that cash, right, you're able to earn a very nice yield there. We also know many of these big techs have very low debt levels or no debt, some of them, right? Which means, they're not really affected by higher interest rates. Higher interest rates are actually a net huge benefit for these companies, where the same can't be said for all companies out there, right?